that means we are now live here on our YouTube channel. It's our halftime report, Tackle Trading's daily show where we go through the market step at a time, looking at charts, news, anything grabbing our attention, economic data, corporate news, and break it all down, analyze it, give you guys some insight out there so that you can better run your daily routine as a trader. And traders, welcome to our Friday show. It is Friday Fun Day, and we've got Coach Frank here to help us analyze the markets, take a look at the technicals, break it all down. And I do believe he has some charts to share with us at the end of the show as well. We're going to start with you, Frankie. How you doing today?
Doing well. Great to be here as always. Man, that week went by quick. I guess they all do. But
they all do, brother. I mean,
they all do. But it's always great to be here. I always look very much forward to Friday Fun Days. So as always, my pleasure.
Yeah, absolutely. Great to have you as always. And looks like the team's excited about as well. By the way, as you're coming into the chat, hashtag Team Tackle is our official hashtag. We're a community of traders here, getting together, helping each other better navigate these financial markets on a daily basis. If you want to be a part of that community, real simple, click the thumbs up button, click the subscribe button, click the bell, and come back and join us every day. We go live whenever the markets are live, 10:30 Mountain Time, 12:30 Eastern, 9:30 Pacific. And we've got Coach Matt back with us here, a couple of days off there, Maddie, but you're back here on a Friday to finish the week strong. How are you doing today? And you've had a busy week, man.
You know what? I've been out of pocket for a lot of this week following up Monday. And quite frankly, what a tough week to be out of pocket and trying to catch up on all the news this week in the market. So just honestly, it feels like that day for me that many of us have where you're gone for a few days and you're getting back to it and you're like, where do I start? Like what type of news? You got earnings reports, you got stimulus proposals, you got political just upheaval everywhere. I mean, it's just it's one of those weeks, but I'm glad to be back here with the crew. Feels like I'm home finally.
Yeah.
Glad to be back with the crew.
Yeah, it's great to have you back as well. And let's get started right into it here, guys. We got Cody running the screen on his side as well. Cody's looking at the chart here. Cody, I'm going to have Frank give a quick technical read, and then you can add anything else that you're seeing as well. But Frank, how are you interpreting the charts here, starting with the S&P 500?
I mean, I think you have to look at the reversal. I mean, we were selling pretty good, right? There was, let's not get carried away, right? But by today's standards, we were selling pretty good. A very strong response as we worked back into that 20 SMA on the S&P 500. I mean, that's what you want to see as a buyer, right? You want to see the resolve. It's easy when it's just going up, right? When it's going down, somebody's got to be the first one in. And so seeing that resolve, I think you have to look at that from a positive perspective. I don't think that it's changed our technicals really whatsoever. And I think as you look at the response to today's low, effectively, I know there's still plenty of time left, so anything can happen. I do think you have to look at that as a positive for the bulls.
Mm-hmm, mm-hmm. As I'm looking at the market this week, obviously we had a lot of meandering back and forth. We're coming into Friday and you've got rising moving averages, old resistance. It's kind of a choppy mess in some regards, but it's also holding up very healthily in the face of, some, lack of news headlines in some ways, but also some mixed news headlines in other ways. We had a stimulus proposal over the last 24 hours as well from the Biden administration we'll have to talk about. But Matt, kind of muted price response. How are you reading this chart, Matt, just technically?
Well, I mean, when you're looking at the market right here from a technical perspective, you got it breaking out, late last week, set that high at about 38.25, and then it's really kind of been consolidating. So I think what you got the read on the market is you got it as a high base, consolidation above 37.50. And like Frank said, you came down today, obviously, and you're hitting that 37.50 support level. You're testing that for really kind of the first time. And it really did hold from an intraday perspective, which you got to think is a positive coming into the week next week. And you're also hitting that rising 20-day moving right in that bull zone from a technical perspective that we'd like to see the buyers come back in. And although you never want to be the first one to buy, you certainly don't want to be the last one to buy either. And so you got to like what you're seeing here early on a Friday afternoon coming into the market. And as long as support holds, I think you got to be looking at buying opportunities coming into next week. Mm-hmm. What I think is really kind of telling the story this week, though, from a technical perspective, is more from a sector perspective than it is from a broad market perspective. We take a look at a couple sectors that are really showing a little bit of weakness this week. Give me a technical read on communications very quickly, Frank, because when we're looking at the market and we're seeing it from a, bullish perspective, a little bit of slowing momentum, you do have some concerning data points that are happening in some of the sectors that is giving you is showing you some of that weakness in the broad market. Give me just a technical read here on communications, and if we should be a little concerned here, Frankie.
Excellent question. I hate this ETF, by the way, because it's so top heavy, right? With two
It
classes
is.
of Google shares and the Facebook, but
Yeah,
it still can be
It is.
useful as long as you keep that in perspective. We're at a very important price point on the ETFs chart. I 100% agree with you there, Maddie. We are testing that old resistance this whole week. Basically, we've been kind of using the 50 as our resistance, catalyst, but holding the breakout point from back in November. This fight's important. Is as long as we're above that, I mean, you might not be loving it, but I think it's hard to hate it, if you will. But if we do see that support give way, and we're seeing that 9 fall, and we've seen it try really all week to get back above the 50, and at least as of right now has not been able to get that done, right?
Yeah.
So I don't think we need to be overly concerned on this chart just
Okay.
yet.
I agree with that, but this has been an area of the market that's kind of been driving that's been a little bit responsible for that fade action we've seen this week. Obviously, Google's in the news out there, Facebook's in the news out there, Twitter's in the news out there. This is a brand type sector, right?
Sure,
a lot
yeah.
of brand awareness in this sector, and so there's a lot of news in that. And especially earlier this week, you saw a little bit of volatility there. But take a look at some of those stocks you just talked about. And again, this is one of the weaker areas of the market outside of some of those really boring like utilities and real estate.
Right, and even they kind of got cooking this week.
But
you
even
missed out on that. That's what you missed.
I did miss out on the 3 days that you could have bought XLRE. I did miss out on
Picked
that.
a bad week to get moving.
Okay, so let's see if this area of the market could impact a little bit of bearishness next week. Look at Facebook right now. Now, this is not a company that I like, not in any capacity. I have been out on Zuck for a very, very long time.
Sure.
But as an investor, don't you gotta be interested at the 200-day moving average on a company like Facebook?
If you're in it or looking to get in it or are a fan of the company, you would like to see that be a catalyst for sure.
So I'm not looking at it because I hate this company.
Right.
But you could see a lot of other people really liking it from a 200-day moving average bounce, right? Okay. So that certainly could show a little support to that area of the market, which could give the market itself a little bit of support level. What about Google? Give me your technical read on Google.
Effectively, Google's sideways, right? I mean, effectively.
But in that sideways, where are we at?
We're closer to support than resistance right now. I mean, it's what? I'm not going to try to embarrass myself doing the math. But we are closer to support than resistance. But definitely in a very range.
It's in the zone, right? It's in the zone. Now, if Google breaks 1700, obviously you would be very concerned about the market itself, right? You can be very concerned about the market. It's
the
XLE,
sector, the XLC, the ETF,
XLC,
absolutely,
exactly.
yeah.
But for now, and for the most part in human history, you always bet on support to hold until it doesn't, right?
Right.
So you can see communication showing a little bit of weakness right here, and it certainly has given the market a little bit of weakness right now. However, Facebook sitting at major support, Google sitting at fairly decent level of support. I would definitely put the 200-day moving average higher than a triple bounce off 1700, right? But you're still sitting at a support level. Take a look at some of the areas that were strong in the market, though. Let's take a look at finance, for example, for a second. And Tim, I know I don't want to step on your parade here.
No,
but
I'm good going through sectors. Not at all. Yeah,
okay.
Not at all.
So the banks this week so far, or not the banks, but the financial sector itself has been a very, very, very hot area of the marketplace. It's been one of those, and ever since post-election analysis took hold, and you had the economy reopening up theme, and you had that traditional sector rotation from non-cyclical into cyclical, you started seeing base, energy, industrials. You started seeing these areas of the market really drive the market, right? You look at the last 3 months relative performance. What are the best sectors out there? Energy, basic material, finance, industrials, consumer cyclical, healthcare. Those are your best sectors out there. And specifically in the last week of the market, this sector's went gangbusters a little bit pro financial. I know with all the fintech out there and Bitcoin out there, we do blow off tops kind of don't all look the same. But in a sector like finance, you've had a breakout at 29 and all of a sudden you're 2 weeks later, you're up 10%. That's overextended. And then the banks had earnings today. And the only thing I'm seeing in the bank's response, you got Wells Fargo down today, JP Morgan down today, Citibank down today. On earnings numbers, Citibank, $2.07 versus the expectation of $1.35. And Tim, we'll look at these charts here in just 1 second. Revenues coming in above. JP Morgan beat on EPS, beat on revenue. Wells Fargo beat on EPS, beat on revenue. So what's happening? The only thing that's happening a little bit is just the reshuffling of the reopening trade. That's the only thing that's happening. You're overextended in finance. You're locking in profit in finance off what should be considered fairly decent economic reports to start, not economic reports, but earnings reports to start kind of the earnings kickoff this season. And so you're sitting at support in some of the sectors. You're overextended a little bit. My point is this, there's not a lot of bearish analysis out there, guys. And I said this last week with Bitcoin. You're basically, with Timmy asked me to analyze Bitcoin, I said this isn't a bull versus a bear thing. This is bull on bull crime is what it is. And that's all you're seeing in the short term here as well, is just a little bit of profit taking today on some of the areas that are a little overextended in the market, whereas some of those areas of the market that did not participate this week, that held the market back this week, communications, technology, these types of areas of the market, consumer staples as well, those areas are fighting for support. So you can certainly see some of those areas of the market that have been very important to the market stagnate a little bit. You could see them form high bases. You can see them form a little bit of retracements, whereas some of the areas of the market that did not participate this week, such as basic materials, communication services, consumer defensive technology, industrials, those areas of the market that did not participate in any upward movement in price this week, you could see them starting to pick up a little steam next week because they're sitting at support where the other areas of the market are a little bit overextended. What I'm seeing from an overall price action perspective is the market is still bullish, wants to be bullish, and with all the money we're going to be throwing here this year, you want to be in the stock market this year. It's just a matter of rotation.
And we're going to get a lot of that rotation. Obviously, we've had it all through 2020. We saw these micro rotations happening. We've been seeing it here recently. And I think the read on finance is a good call here, Matt. It's just overextended, and we're going to go through those bank earnings specifically one at a time and look at the charts here in just a few minutes. But it's not like they missed, Matt. From my initial read on them, they actually seem to come in. I know the JP Morgan earnings, they came in on top and bottom line.
Well, let's take a look at them. Let's take a look at them very quickly. JP Morgan. JP Morgan came out and basically they had an extremely good earnings report, in my opinion. Now, again, and you'll see this in the numbers in the banks. What was expected? What did they do last year, right? And so what we're looking at, JP Morgan, you got $3.79 EPS versus the $2.72. That's a very, very good beat on EPS numbers. Revenue numbers came in at 30.5 versus 28.2 billion. So a good, healthy beat on revenue numbers. Investment side was really, really good for JP Morgan. Lending side was slightly down. So the investing side covered a little bit of the nonsense that was happening on the lending side, but overall JP Morgan had a very decent earnings report, but year over year down 10.5% year over year. Truly, I don't see there anything in these numbers to be concerned about with JP Morgan. The fascinating thing, if you want to look into it, I'm not going to cover it here today, but the fascinating thing, if you want to look into it, is what JP Morgan said regarding the competition that's been brewing in fintech. And that was a fascinating conversation about how fintech, the PayPals, the Squares, the Alipays, these fintech financial companies, how they have increased market share against the traditional banks. I thought that was a fascinating and just honest and very transparent answer out of a CEO out of JP Morgan and Jamie Dimon today. So if you do want to look into that, definitely look into that, because I think it's going to give you a little bit of belief in fintech when somebody like Jamie Dimon is, and I'm just going to give his words, scared shitless over fintech. We might want to be a little bit in fintech.
I did not read that transcript.
Oh,
I'm interested now.
it was
Yeah.
fascinating. He said, quote, "We should be scared shitless of fintech." And then he sent a list that we should all have a watch list of these companies. He said a list, like a targeted list, says, "This is our competition." And I honestly felt like it was one of those answers from a CEO. I was like, yeah,
Mhm.
that is your competition. It's not Citibank anymore. It is Square and PayPal taking payments from you guys. It
Mhm.
is. It's fascinating. But you go look, Team Tackle, go check out Jamie Dimon's comments on fintech. It was really, really good.
I'm gonna look them up now. I'm gonna dig into that after the show here. But also, did you see anything else in Wells Fargo
Well,
or Citi
Wells
earnings, by the
Fargo's
way?
never going to have the creative, amazing conversations that Jamie Dimon has, because it's, let's face it, it's Wells Fargo. But Wells Fargo comes in at 64 cents a share versus 59 cents a share expectation. So a little bit of a 10% beat on Wells Fargo on EPS numbers. Revenue came in about 5% higher than the expectation, 19.1 versus 18.1 billion. Revenue did decline 21.2% year over year. Wells Fargo actually had a very decent quarter from an earnings perspective, better than what they could have anticipated. Wells Fargo's had a lot more problems with their bank than, say, a Bank of America has, or JP Morgan Chase has, or some of those other big money center banks. They had what really kind of clouded a very positive earnings report. And guys, all these banks are down today, and I would not take anything out of that other than simply this: they were overextended in the short term, and anybody was just trying to find a reason to lock in some profit. I'm not concerned about these banks right now from an earnings perspective. The one thing that we do need to be concerned about was Wells Fargo, which could be a little bit of a good thing moving into the future, because they're not going to have this cost in the future. Remember, Wells Fargo had a very big restructuring plan. And so they had an additional $1 billion in cost associated to this quarter that they otherwise would not have had. Without that, fantastic rockstar report coming out of Wells Fargo today. So that put a little bit of a cloud on their numbers because of that additional cost. But more than anything, I'm seeing this as an overextended situation where Wells Fargo is up, what, 70% in the last 2.5 months? Literally, like from the last quarter to this quarter, what are they up about 40%?
Mhm.
That's a
Did you
pretty
ever
big
think you
price
would
move.
say that sentence about Wells
No,
Fargo?
no. But I never expected, in a pandemic, in an economic situation that was the worst thing we've ever seen in our life, to see, the stock market actually go up 16%. So like this is new things for us. I know.
Mhm.
But you can also understand looking at JP Morgan, looking at Wells Fargo, and now looking at Citibank. I mean, I can give the numbers on Citibank. They're really, really good. $2.07 EPS numbers, expectation $1.35. Revenue numbers 19.1 versus 16.5. Really, really, really healthy and good numbers. Why are they down today? Again, we can point to the $1 billion in increased costs and restructuring. We can point for Wells Fargo. We can point to lending down, the lending percentage down versus the investment side of JP Morgan. And we can point to JP Morgan and Jamie Dimon being, scared, whatever, because of fintech. But you can point to that. You can point to Citibank being, having amazing numbers, revenue down 23.5% year over year. So you can point to any one of these three banks' earnings today. You can point to something that maybe you can justify just, the downward movement in price from a psychological level, but none of that is actually legitimate or true. The only thing that is happening here is Citibank is up a rock solid 40% in the last quarter. JP Morgan up whatever 40-50% in the last quarter. These are banks we're talking about, and they're up massive numbers in the last quarter. I think this is simply an opportunity for institutions, hedge funds, and traders alike lock in a little bit of that profit.
Mm-hmm.
I think you're looking at dip mechanics here on the banks is my entire point.
Mm-hmm.
I
Well,
agree.
and with financials being overextended, having the reactions here, it will be one of the first sectors we can get through the bulk of these earnings on. And so dip mechanics, because we're going to be dealing with this problem over the next couple of weeks, is what do we want to play? Well, who has earnings behind us or who has earnings far enough in front of us? And anybody who's already reported starts going on to a watch list of potential trades as those patterns set up. And obviously it's just one day here, so they're not set up yet. But yeah, I appreciate the thorough analysis there, Matt. That makes a lot of sense to me. And I think a lot of people out there probably can get a lot of value out of that. Let's keep looking at technicals on the indexes though here if we can. And obviously we look at the S&P kind of holding. I don't see much different in the NASDAQ and the Dow that we need to look at, but I do want to bring up the Russell real quick, just as one of the indexes to take a look at. You know, so heavily denominated with energy and financials and some of these smaller firms, obviously not the big ones like JP Morgan and Citigroup, but when financials are down, you know, small caps can be down a little bit as well. But really, Frank, this is still just riding the lightning, quite frankly. It's down 0.2% here today, but it came down to the 9 EMA, tinged it to the penny intraday, and then boom, here we are back up just a little bit off the intraday lows. What's your read on small cap?
Yeah, you don't want to get in their way, right?
Yeah, no.
I mean, that's a ton of momentum. I mean, great to see, you know, that 9 continue to hold from a momentum perspective. I mean, it's not like if it were to go below the 9, that's the end of the world necessarily. But I mean, when things are riding the 9 like that, I mean, there's a whole lot of oomph behind them. So just, I mean, it's been impressive, for lack of a better word, and nothing that happened here today, in my estimation, changes how you should be reading the small cap area of the market.
Yeah, just the momentum, the trend, they're all holding just so incredibly strong. I agree with that. Let's move into commodities next, if we can. Let's start with crude oil, and let's get technical read here. It's been very healthy for quite some time here, Frank. We've been talking about the developing, trends in crude oil that also correlated into the energy sector and some of the stocks there that we liked. But for the first time in a while, you got a big fat red candle up at the top. It's after not a bad little week here, and again, still holding the 9 EMA. Are you looking for a deeper retracement here? What are we looking at?
I think from a bullish perspective, ideally you would like to see it hold 50, hold the breakout itself. Sure, if you're in it, you want it to hold the 9, right? You don't want it to pull back at all on you. But I think technically, as long as we're above 50, the folks that are, looking at that break as a fairly significant move are going to be pretty comfortable with where they are. At least that would be my personal expectation. So whether we, do bounce off of the 9, pull back a little bit further into that $50 zone, which is going to line up real nicely with that 20 SMA potentially, I think you're looking at that as a retracement opportunity in that scenario. No reason technically to not to be a bear right now. I don't see any great technical reasons or arguments that you could make to be bearish on crude oil right now. The break's been solid. We can't just go straight up all the time, right? So as much as we might like it to do so. So I'm looking at that $50 break itself. We've got, the 9 and the 20 as support catalysts. And as long as that's holding, I think you're still pretty happy with where you are on crude.
Yeah, I think you got to be still happy if you are long crude, long energy. Obviously, any pullback has got a lot of potential catalysts that could hold it up as well. Even if this 9 doesn't hold, comes down to the 50 like you're talking about, that would be a pretty clean technical setup if that did develop that way.
For sure. And if we just do this little dance, because that's pretty tight, right? That is fairly tight. We could see this turn into a little bit of a high base breakout going into, the middle part of next week above approximately 54. So I think right now 50 and 54 are kind of the numbers that really kind of jump out to me, or at least approximate numbers from a, hey, if we break 54, I've definitely call that a bullish signal. If we get to 50, that should, be a tempting support catalyst for some new buyers.
Gold next, and we'll talk stimulus numbers when we talk about the dollar here in just a minute as well. But I did want to get a read on gold here. Obviously, last Friday we saw the sharp sell-off. Couldn't hold the 1900 technical level. We talked about it. Came down to the 200 MA. Now we're fighting down here, Frank. We're definitely fighting for some support. You've got wicks down here around this 1820 to 1830 zone. There's a bunch of price action that I'm watching here. But what are you seeing here in gold?
Right now, it's going to be a real tough sell as a buyer. I'm like a lot of folks. I don't really trade, swing trade gold, and I generally look at it from a bullish perspective and not a bearish perspective, at least as far as making moves is concerned. But a couple things that do have to concern you. I mean, obviously the failed break, last week. There's no way to positively spin a failed breakout, right? So we have worked back into support. Matt and I were talking in the pre-production, kind of dancing at that 200-day moving average. It looks like we are going to close below that for the week. Anything's possible. There's still some time left, but it's looking that way. We do have the 50 weekly at approximately 1800. And so, as Matt has brought up a lot before, the 50 and the 200, they're not necessarily in the exact same place, but they kind of behave the same way. Is that fair to say, man? I won't put words in your mouth.
Yeah, they're not the same mathematical algorithm, obviously.
Right, but it's kind of a zone,
they're always
I guess.
in the zone, right? I mean, you're talking, 50 weekly would be how many days?
Oh, don't make me do math. Didn't I already say you don't want to see me do math
there's
live?
there's not a discernible difference between the two.
Mhm.
But when you will see certain environments where they separate themselves a little bit more than historically they do. And so my question to Frank in the pre-production show was, at what point do you consider a violation of the 200-day moving average an actual violation of the 200-day moving average? Because that moving average might look like a finite little green line on a screen somewhere, but that is a massive battle zone, right? That is a zone around that area. And when you have the 200-day moving average right there at 1845, and if you'll go to a weekly chart, you'll see the weekly, 50-day moving average, which is the one you're really looking at here. Where did it bounce? Like for example, when we saw the violation of the 200-day moving average last time, where did we find support technically? On the 50 weekly.
50 weekly. Yep.
When you saw the violation of it back in March, where did you find support actually? On the 50 weekly. And so very similar today, we're seeing that violation and the continuation of that violation. And nobody's got to like what we're seeing in the short term in gold, obviously. But when you're seeing that, at what point do you say, okay, that is a violation of a major support level that I need to be a little bit more concerned than I currently am on, right?
Yeah.
And so you got that weekly right there at 1800. You got the daily right there at 1845. How much credence are you going to give on the violation in the 200-day moving average when you have that 50 weekly right underneath it, Frankie?
It's a really tough question, because you do have to ding it for the close, the closing below the 200. I think you have to ding it, but because we're still above that 50, I don't want to ding it too hard, because I know that somewhere in that zone is really, everybody's going to have their own 2 cents on it, right? Especially on a product like gold, they're going to have their own 2 cents on it. So I think, you kind of give it wherever you might have been, I'm going to ding it 1. And then I'll ding it another if it breaks the 50. I think the real ugly thing, and this is just my personal opinion, the break of the 50 weekly would be worse than the break of the 200, in my opinion.
Yeah.
But that break of that 1775 pivot, that's where I say, we have no buyers that want this product. That's really concerning. And so I think the proper way to think about it is from a risk perspective. If I own some gold, whether it's, GLD or gold stocks or something I'm cash flowing, whatever the case might be, is to think in steps as, hey, if I expect this to come to 1800. Those are my personal expectations. And if that 1800 breaks, I expect that it's going to come to 1750. Those are my personal expectations. Whether they're right or not, they're still my expectations, right? And am I, where would I want to, maybe, buy that protection or roll that contract or, just close out of the position altogether if that's, the way I'm looking at it. So instead of having a hard line in the sand, I guess for me, the hard line really would be 1775. I guess to answer your question in the purest format, that would be my line in the sand. But I think I would look at it kind of in phases. If this breaks, this 200 giving out, we should come to that 50 weekly. If that breaks, that's going to make me a lot more worried, and I expect it to get to 1775. And if that breaks, it's not great technically.
I think you're in that walking down the stairs mentality right now,
Yep.
and you're finding the support, right? You violate the 200, you're looking at 1800. You violate 1800, you're looking at 1760 by 1750. When you violate that, you're looking at 1700. Underneath 1700, you're looking at, well, I might be wanting to do something else here. So I get what you're saying there. It's a tough position for gold. It's a battle happening.
Mhm.
I know most people have picked their sides long term, and with the amount of money we're going to be pumping into this, I think long term is really, really good. I just think in the short term we gotta wait to see who's going to win this short term battle. I
Mhm.
love 1800, by the way. Love
That
1800.
should be, I mean, it's a
But
big round number. It's the
yeah,
50. I mean, that would be that should be an appealing price. And, we'll, hopefully be able to see it as it develops, because we'll kind of establish that support level. We'll see these shorter term moving averages like the 90 MA start to flip around, right? We'll do things like set up higher lows. So, if I'm looking to add to anything here, I mean, patience is the name of the game. As always, right? It always should be, get exactly what you want to see. But this chart definitely needs some development. It's very hard to paint a super rosy picture in the very short term, I think.
Mhm. Mhm. Yeah, I agree. And by the way, Cody, you're on a 9-month daily chart. If you get a 1-year daily chart, there's a couple of different, I think one extra period actually kind of helps with this analysis here, guys, because the last 2 times we danced below the 200, it was dancing around it for several different stretches, in the March, capitulation we had when, the people were getting margin calls and all that, came down to the 200, held the 50 weekly, danced a little bit below it, but then it recovered. So even just a month and a half ago, danced below it, then it recovered. So here we are. There's a lot of zones in here that are still going to be in play. I love the way you guys are analyzing this, and I think it's really helpful for me. So thanks, guys. That was awesome. So very good. Let's move on to the dollar next, if we can. And Matt, I want to talk about stimulus package proposal. Not really a bill yet, is it, Matt? But Biden's calling for
no,
a
it's not
lot of
Bill.
different bullet points here. Give us the detail.
How much time do you have? How much detail do you want in these wish lists sometimes? Tim, looking at the proposal here and this is not an infrastructure proposal. This is a stimulus proposal that is basically tacked on to the stimulus proposal that we just did with the $600 in direct stimulus checks. So what Biden is proposing for the Congress to take up starting next week, I believe, is they're going to increase that $600 to $2,000, so an additional $1,400. Now, this is not targeted to the people that need it. This is just this is a Milton Friedman helicopter checks. Drop them everywhere. Just drop $1,400 checks. See who gets them, because they're all going to be spent into the economy. Right. And so Milton got his way on this one. So we're going to look at additional $1,400 to all Americans, again, non-targeted. Now, I fully anticipate that $1,400 to pass. Fully anticipate. Now, there's going to be debate over it, but you got to realize politicians are on record as supporting $2,000 stimulus checks. They're going to have a very hard time 2 weeks later saying, no, I was kidding.
Mm-hmm.
Okay. So that's going to pass. They also have a whole laundry list of other things out there. $400 in weekly enhanced unemployment benefits, COVID testing, $50 billion, $170 billion to the schools, $300 billion to the states. But here's a problem. They also wanted to they also want a $15 national minimum wage act in a COVID stimulus bill. Now let that one sink in for a second. Let one of the most hotly debated, and it is debated, guys. There's evidence on both sides here.
Mm-hmm.
It's a debate. But we're talking one of the most hotly debated economic principles of minimum wage from a capitalistic perspective, inserted into a COVID relief bill. That's what we call pork, ladies and gentlemen. And pork needs to be beat down. And so this is not going to be one of those scenarios where you're just going to have a bill and you're going to have a vote on the bill. No, you're going to see this bill getting broken down into targeted scenarios through the bill making process at the government level. And so it's going to be fascinating to see what ultimately ends out here. Right now, we're looking at a 1.9 trillion additional stimulus. We're talking somewhere around 5.2% of GDP. So we're talking a fairly substantial stimulus bill right now. What ultimately is going to get passed, most likely, and I believe Goldman had it around 1.1 trillion where they thought it was going to come in at. I think it's north of 1.1. If I had to say, I would say I would take the over of 1.1 trillion. I mean, this is the United States government we're talking about, so I take the over on all transactions. But I think it's going to be close to the 1.1. I think it's going to be targeted, and it's going to be done over time. And quite frankly, Tim, I've been saying that for 2 months.
And those targeted little micro bills, as they do come out and go through it, obviously it's going to create endless headlines around it and conversation.
Well, the 1400 isn't going to be targeted, and that infuriates me because there is a very, very large majority of the United States population that has not lost any income in 2020 and actually saw an increase in income in 2020. They don't need stimulus, and they certainly don't need my kids to pay for that stimulus 15 years from now. So I don't like it, but that was a little bit of my personal belief system, so I apologize for that.
No worries about that. Got to throw that in there,
At some point, somebody's got to say we got to stop spending everybody else's money.
Yeah, Frank. I mean,
Matt, I do believe they have an income cutoff, so it's not necessarily all Americans getting the check. I believe it's around 75,000 or something like that you don't get a check.
Right. We understand that, but it's not targeted people who lost income is what Matt's talking about. And we continue to spend money into our national debt. Is Cody taking the other side of a spending bill argument? What in the world? What world do I live in right now, Frankie? I thought, Cody would always just kind of come in and say, hey, do not spend money. But I get it.
That's exactly what I would say.
Yeah, I get it. A lot of details, obviously. The $15 minimum wage, I think, is going to end up just throwing a bunch of complexity into it. They're probably going to end up stripping it out, and they'll have a different conversation. But it'll be interesting to see how the thing works itself out over the next couple of weeks and what they actually do. Matt, does it affect the way you think about potential infrastructure down the road at all? In fact, they're talking stimulus here first.
Hold on, really quick, Tim. Go somewhere else and come back to me.
Sure. No problem. Let's go to Bitcoin. I want to take a look at the chart. We'll come back to Matt on that question if we need to. BTC next. And Frankie, I've been talking about this one all week with the coaches who are here in the halftime report. We've been looking at the price action. Obviously, the big sell-off on Monday. That one candle's actually three if you include over the weekend action that Bitcoin had. Volatile range between 42,000 and 30,000. Then it started meandering back up the chart. And even with the red candle here today, it's holding the 9 EMA here, Frank. Scale does matter. Matt was talking to me about some of the ranges earlier in the year. When you go back and you look at them, they look really small right now, but some of those ranges between like 10 and 13,000, that's 30% volatility, or 6 and 8,000, you're talking 25% volatility. So we get volatility in Bitcoin. So how do we read this chart here, Frank? Because it's taken off. We're starting to see a little bit of action up here at the top. What are you reading?
I think it's shown just a little bit of, I don't want to say weakness because that's wrong to say, but we have kind of bumped our head into that 40, a couple of times, right? So right now we're kind of in the middle of the pullback. The buyers who came in on the pullback, their support level, down in that 32 range is continuing to hold. It can't go straight up. Well, I don't know, Bitcoin, I guess it can sometimes do that, but it's not doing it this time. So just working into that resistance, we're very accustomed to on this particular run of Bitcoin that resistance never mattered at all. And I'm not saying it matters big picture, I don't know that, but for the first time in a bit, I guess the way I'm looking at it is the resolve of the buyers on the dip is a little bit more tested. And again, it's all relative, right? This is still a very strong chart, but a little more resolve. Should I just lock it down at resistance and then buy the breakout? Whereas, last month and a half, I mean, it's basically been any move you buy, right? And so I think right now, if you're looking at this, the 40 break becomes important. If you're, played the pullback, hey, you've got a plan, I hope, and you're probably ahead of the game on Bitcoin already in that scenario. But as we're looking going forward, I do think it's probably best to take out that resistance zone personally, with the way that we did see sellers come in off of that here today, knowing that that's the profit taking zone from just a few weeks back. For me, I'm always I'm an err on the side of caution guy, right? If it's resistance, I assume it's going to be tough to break, and I'm just always more comfortable, having the break itself be the signal. As long as that support level holds down there in that 32 range, if that support breaks, then all of a sudden Did we put in a lower high and a lower low that can change things, at least in the short term? Well, that's a ways away, right? So right now, I think we've got our lines in the sand, right? Support, resistance, we're kind of in the middle. We are holding the 9. It is flattening out a little bit, right? It's not quite as insane as it was, but I don't think that's enough to get me to say, oh, well, this is the end. I'm not going to be that guy on anything, Bitcoin or anything else on the technical side of things. But when you bump into resistance and it slams you a couple times, you got to respect it, right? You have to assume that for whatever reason, maybe I don't know what that reason is, but for whatever reason, folks are selling at that price point.
Matt, the conversation you and I had earlier today really put a lot of context in it. Even for me, I was looking at the numbers, thinking about the volatility and the percentages. It has been a wild couple weeks, but this Bitcoin's a crazy product in terms of its price volatility on a day-to-day basis. Yeah. What's your read here, Matty?
No, the only thing I was saying earlier, Tim, was, when you're looking at the scale, it looks massively volatile right now, right? Up, especially when you think about the numbers, right? 30 to 40,000, right? What's that range? 30 to 40,000. That's 25% range, right? Okay. So it's big time range, no doubt about that. And the scale is amazing because we're talking about $5,000, $10,000, $12,000. I mean, it's like when we think about how we think in terms of money and our natural conversation we have around money, it seems massive. But I don't think it's any different, quite frankly, than the volatility before the $20,000 breakout. I don't think it's vastly different. And I think it was actually a little bit more volatile right underneath the 10K breakout when it had a range from 7,500 to 10K. So you were talking about very similar percentage ranges. Scale looks more volatile than it really is, was the only point I was making in the pre-production show, Tim. My point is, I don't think volatility has changed that much in Bitcoin in the last 6 months. It's been volatile, and you can anticipate it to continue to be volatile. And for right now, and probably until something dramatically changes, the bulls, and I said it on the pod last week, I'll say it again. I don't see Bitcoin as a bull v bear scenario. I see the bears just, crying milk on Twitter. They don't actually fight this war at all. They're not an active participant.
That's a really interesting point, because I didn't think about it like that, but you're 100% right. It's all how bullish, right? Or where you would be bullish, where you would buy, what you would want to see. You don't hear a lot. I can't even really think of anything that I've really seen that's, making a real bearish argument.
There is no
I'm not ready to be bullish today.
The only bearish argument is it's overvalued. And you don't even know that.
Yeah, and you can't really, right? Yeah, you can't know that, right? Yeah.
Like that, the overvalued based on what? Only technicals? Like you can't. Overvalued is a fundamental term. Like we don't even know if this is a currency or a commodity to compare it against yet. Is it overvalued against gold? Gold has a $10 trillion market cap. What's Bitcoin right now? South of 1 trillion?
Yeah.
Okay, so is it overvalued in terms of gold? I don't know. Is it overvalued in terms of like a commodity or a currency or the dollar? The dollar has trillions and trillions and trillions and trillions and trillions and trillions and trillions of zeros underneath that. So I don't know. I just don't feel there's a strong bearish argument. And what I said last week on the pod, it's just bull on bull crime, is kind of what Frank was talking about. It's just a matter of, okay, when to buy and when to lock in profit. That's the only conversations traders are having in Bitcoin right now.
Yeah, and those bull conversations, they continue to go on. In fact, the questions I get from people
I got to shut something down that's starting in the chat real quick. James, Linda, I hate bonds, and everybody in the history of mankind should hate bonds from here to in the future. Bonds are garbage, but I did like the joke, James calling me an old timer because I didn't like the volatility of holding Bitcoin. I did like that. All of a sudden, if you can't hold against 30% ranges on a daily basis, you're an old timer who should stick to bonds.
Better go into the bond market.
Go get in your rocking chair. James, I want you to get in your rocking. I'm going to get a rocking chair. Me and James are going to rock, and we're going to talk about volatility.
Sitting on the porch, chewing straw, telling stories, talking weather.
I
don't
just
know.
I had to shut that down. I did not want. I can see it right now. Matt supports bonds. No, I hate bonds. What are we doing?
By the way, Bitcoin market cap 674 billion as of this
Yeah.
exact moment. So
Yeah, I just see this as a very volatile bull on bull type of criminal situation happening. But
yeah.
I'll tell you, I've said like I will not hold through this. This is not me. There's many areas of the market that you can speculate in that has very similar type of performance. So not me, but in terms of no, I'm definitely cheerleading every Bitcoin holder on. I want you guys to blow it out of the moon.
Oh, for sure. Yeah, I'm a big corn
man.
cheerleader at all times.
So
I'm
all
a fan
times.
of people making money, so
For
I'm
sure.
with that as well.
Big cheerleader on this one.
Absolutely. By the way, let's move into stock talk. That's it from a big broad market perspective. There's not much in the news here today that I want to get to. There's a couple of IPLs and what not over the last 2 days I'm not that interested in right now, but I did have Frank had some charts here today. And I do want to go through those. I do have a couple of price target upgrades as well as stock upgrades. We can go through pretty quick. And we got to get to SunPower and APA from Team Tackle. We had a request to look at those charts a little bit, later in the show, and we're about to do that right now. Matt, we had an upgrade on Apple's price target. I'm going to do a quick rapid fire. You tell me agree, disagree on just a couple of these.
Great.
Apple had a price target upgrade to 155 from 131 at Loop. Would you raise?
Let's just start making stuff up. Okay.
Jack the price.
Let's go 160.
165, 170.
Let's auctioneer this. I got a 160, 160, 160, 170, 70, 70, 70. Let's auctioneer this. No, I mean, where are they getting that? What? No. Listen, anything above resistance on Apple at 138.79 is too aggressive right now.
Well, let's see if you agree with this one then, because they jacked the price on Tesla again. Wedbush put a street height target at 950
Doesn't
on
matter.
Tesla.
It's Tesla. What did we say? Every breakout of 700 goes to 1,000. Nothing matters until that happens.
They're on the track.
So are they south of 1,000?
They said 950. Yeah.
Yeah, I agree.
Yeah. Okay. Sounds good. Quick one on Snap here.
By the way, keep an eye on Tesla, that 9 EMA inching itself up there, ladies and gentlemen. That rising 9. What do we know about the rising 9 in a high base? Alpha 9 once it touches, guys love breakouts on Alpha 9 patterns. So keep an eye on Tesla.
Snap got an upgrade.
If you don't know what an Alpha 9 pattern is, you need to attend the halftime report more.
Yeah, that Alpha 9 setting up on Tesla is developing for sure. Snap got an upgrade to buy from neutral at Moffett Nathanson.
We want to touch social media right now, huh?
I don't think this was a
good
upgrade.
Is a no.
I would upgrade to buy into this one right now in the environment. And you guys were looking at communications earlier. Communications got a lot of questions. I know there's some on support and all that kind of stuff. And Snap does have some support here that might hold it up, but I don't see an upgrade here personally. Yeah, disagree. And then last one here, Matt, Spotify got a downgrade from Citigroup, and this has been a momentum juggernaut for a lot of time. Citigroup basically said their podcast strategy is not working. It's not making them any money and it's all fantasy. Had some really, really critical things to say about Spotify's strategy in the last year and whatnot. Do you agree with a downgrade to sell Spotify? I disagree with this personally. I'll just throw that out there right away.
Oh, I love how you just did that. I disagree, and you set the stage, which means I have to agree with the downgrade here.
You can agree with me, Matt. There's nothing wrong.
Are we talking
with
about
that.
Spotify or Shopify? Which one's the
Spots.
legitimate bit of? Oh yeah, that would be Shopify trying to pretend to be. No, I'm downgrading because Pandora is still the better music choice for most consumers.
Get out of here.
I know. And by the way, that was inside baseball with me and Tim a little bit. We've been debating the quality of Spotify versus Pandora. And yeah, James will say I'm very old on this one. I still do listen to Pandora. You old timer, you got to upgrade from Pandora. I'm a creature of habit.
I'm going to create a straw poll for all the bond investors out there to see if they more prefer Spotify or Pandora.
There you go.
I'm guessing bond investors have their Pandora players.
Okay, I want to know what percentage of gold owners enjoy Pandora and what percentage of Bitcoin owners enjoy Spotify. I think that's the breakdown.
That's the correlation.
I think if you ask bondholders which one they listen to, they're going to be like, "What's Pandora?"
I hate all of you guys right now.
Potentially.
I got to come back to this nonsense today.
All right. Let's do charts, guys.
Okay, no. Very quickly on the Spotify, real simple though, Tim. They downgraded to sell, correct?
Sell. Yeah.
To sell. You're talking about a company, in my opinion, that is completely just ridiculously overvalued. Like, this company has still not shown a profit, ladies and gentlemen. Has not shown a profit. I'm not certain of the path to profitability. It took Amazon 17 years. It took Tesla a good decade to get there. I'm not certain of that. And we don't know if the aggressive move into podcasting for Spotify this year is actually going to pay dividends for them. And so I know you love your Spotify, but this to me is I can't disagree on it. I can't. Like, it's an overvalued stock that doesn't make money, that has a lot of landmines that they better be right on. And so, even though you love them, want to support you, bro, always support you, bro, I'm going to agree with the downgrade here. I wouldn't fault anybody for saying I want to reallocate some of that gain in Spotify into some of the reopening play. That would not be, nobody should disagree with that one. If you're looking at Spotify and you've made a lot of money in the last year on Spotify, and you're looking at the fundamental condition of Spotify of what created that unique environment for the price appreciation last year, why not reduce some of those high flyers to readjust into some of the areas of the market that have been picking up steam? That makes sense to me. And so I can't disagree with the downgrade.
I'm on the other side.
So, I didn't get you.
No,
You're so
you didn't.
emotional about
Old
Spotify.
resistance, new support. If you want to have a sell rating, let it break the 50-day moving average and $300 first, maybe. I would say that. If you want to be a neutral,
I'm going to write a
Technical.
blog dedicated
Rotation.
to you about brand whoring.
I love Spotify, and I'll stump for them. Dude, I'm going to go listen to some music right after the show.
James, I had a MySpace account one time, but I think I got it like the month before MySpace died. Like, I legitimately think it was like a month before, like nobody used it anymore.
Yeah. MySpace.
James, I'm still the guy that likes to have a handshake, have a conversation, those types of things.
Rocking chair and a straw. Yeah, absolutely. Yeah.
No, the rocking chair is legit. It's on the porch, bro.
That's right. Exactly. In fact, I would love a rocking chair on my porch. No doubt about that. Let's talk charts, guys.
Yep.
Frank, you had some picks you wanted to come in and show us
some setups to look at.
Some look to look at.
Before we jump into them, let's take a look at a couple we had earlier in the chat. We had APA, if I'm not mistaken.
Okay. Apache.
So we had this breakout, right? Why don't you zoom in a little bit? Broke out early, earlier this week. Pulled back into that old breakout zone, that 9 EMA. This catalyst right here this is what you want to see. I mean, when you have something break out, let's be honest, we all want it just to roll, right? So, you don't want it to have any downward movement, but that's, not living in reality probably. So you have to like it, in my estimation, that we broke out, we did pop, we have pulled back and are now testing that old resistance zone, which just so happens to be lining up with that 9 EMA. I think you have to like the price action that we've seen develop on this breakout. If we switch this to a weekly chart, let's see what that looks like, if you don't mind, Cody. So we look at that on a weekly chart. We're saying, hey, this is a weekly breakout. It broke through resistance here today. If we can take out that candlestick high, we're ready to rock and roll, right? So that's kind of the roadblock for us in the very short term, is that high that we set up earlier in this week. But holding the breakout itself, I believe that's a very positive sign personally. And I'd like to get anybody else's take if you have a different read on the situation.
No, I'm looking at it, and obviously you got a little chop here on the daily chart, but you're holding the 9 EMA, you're holding the old breakout point, you're holding the candle from Tuesday, which really was the takeoff blast off candle. The weekly chart is healthy. You do have a higher weekly low and a higher weekly high. It's not exactly what you want. Of course, you want every trade you ever take, the second you play that breakout, to have it run to the moon. Aggressive management might be out of this right now. If somebody was really micromanaging stop losses, they could have been taken out here today from yesterday's low. But but I think if you had a more casual management style, you probably have your stop a little deeper than this. Maybe, you know, Tuesday's low, maybe even Monday's low, quite frankly, on those
Right.
pivots.
And
So
maybe even
I
that
think
pivot from, yeah.
I think there's some discussion that you could have in here, but I don't see just a chart that got blown up yet. Not yet, Frank. It's not.
Yeah, I don't know the future, but
Yeah,
so if it's something I'm watching or something I'm working with,
Mhm.
I like to see it hold its support zones, right? That's what I want to be able to see. So and there's some, interesting, I mean, it's going to go realistically with the energy sector, right? I mean, it might outperform a little bit, underperform a little bit, but realistically, as a general rule, these energy stocks are going to run together.
And then the other one I think we got a request on was SunPower, I believe.
Yeah,
SPWR.
SPWR. Big breakout on these guys yesterday.
Loved the breakout. Yep.
That was a good signal, right? Whether you got in or not, that was a nice bullish signal breaking out of that resistance. No follow through here today, which depends, right? If you are an early breakout trader, you wanted it to keep going. If you wanted to see a close to confirm the breakout, which is generally speaking, not always, but for most breakout patterns, my personal rule is close follow through and not jump in as soon as it breaks resistance. Not that it's my way or the highway, it's just my personal preference when it comes to breakouts. I've not got that follow through. I got my signal, right? But I've not got my follow through at this point in time. If we can develop and it somehow can get pretty volatile itself, right? This is certainly not a boring stock. If we can kind of establish some slowing momentum into a hammer, into a doji, into a green inside candle, I'm looking at that old resistance to act as new support. So whatever catalyst, I'm personally looking for, if I see that, I'm going to look at that as a very interesting situation personally. For the breakout traders who are already there, well, we need to kind of continue the momentum and at least today threw some cold water on it.
And by the way, like solar is doing this in unison here today. They're all on his pullback here, as a reaction to some of the anticipation of the news. But ENPH is down, Solar Edge is down, First Solar's down, Sun Power is down. As I'm looking at a lot, NPH here, Cody, let's flash you a couple of these. So, red candle coming back in the moving averages. They all took off there a little bit. First Solar, though, actually, I think the chart looks weaker than even Sun Power or ENPH as FSLR.
Cody, that looks weaker
FSLR.
To me. Yeah, see, these characters are taking out a little bit of short-term support, right? Whereas, we're not seeing that. We're seeing the break and at least as of right now, the holding of the breakout point, which is the signal, right? The breakout is the signal, and how you would trade it that's going to vary from trader to trader.
And this breakout that I actually was tradable, I did, you see that and say that yesterday when it was breaking out, I thought the breakout of 32 and change was tradable. Now, if you're on this candle here, you had a momentum play. You've got the 9 EMA at $30 on Sun Power back on SPWR. So there's some locations you got to be paying attention to here. The first one would probably start with today's low to see if this is going to develop into a deeper pullback. But even if it does that, Frank, you're going to have the 9 EMA to contest with and support and trends and all that kind of stuff. I think it's just the volatility of solar right now, guys.
Right. I think
you got to know your product that you're trading.
You have to accept that volatility. But yeah, I'm going to call that a bullish signal, whether it's you're buying the retracement to the breakout point, a retracement to the 20 that ends up a little deeper, a consolidation break of that high from yesterday, 2 weeks from now. I think that you have to look at that as a bullish signal, very healthy from the development of the trend itself.
Love it. Yeah, I agree. And then I think those were the two that we were requested by Team Tackle. If we missed any, let me know, Frankie. But then you also had some charts. Matt, before we get into charts, you want to add anything to Sun Power, for Solar, or APA?
I was not looking at the screen, so I'm catching up right now. Sun Power, Cody Special, snapback retracement to 32.5. Let's see if support holds. Give you a doji, give you an upward movement of price. That would be that Cody Special snapback retracement.
I love that. That's what that setup's name is Cody Special.
The snapback. Cody
we all know. Everyone here knows what it means.
Yeah, like that's all you have to say now. Snapback Cody Special.
Yeah,
which is really a failed breakout that you're hoping holds support.
Yep, that's right.
Yeah.
Right.
Or a breakout that you missed, right?
No, I love the snapback. I love those retests.
Right. Yeah, you love the snapback if you're not in. You hate the snapback if you're an aggressive trader that got in early. Yesterday you were feeling real good. Today you're thinking, maybe I should have took some profits, and maybe you did, right?
Today
I mean,
you're
it's
thinking
big, we
maybe
were what,
I should
11%,
learn
some
more
odd
from
percent
Cody.
yesterday.
Mhm.
Yeah, pretty solid.
No, you got to like snapback retracements. I mean, obviously, you want to, as the momentum trader, right? Everything in 2021 now has to be a momentum trade, but as a momentum trader, you don't want to see this snapback. But if you're the guy that likes to see some confirmation, likes to see a retrigger after confirmation, you love snapbacks because they set up so good from an intraday perspective. You just got to see that range kind of establish itself. The other two, very quickly, Tim.
The other one was
we looked at
APA.
Apache.
Apache.
Yeah, APA.
Oh, the reversal
Yeah.
characteristics on Apache. Yeah, I mean, Apache, nice little reversal characteristics over the course of the last, 6 months. I mean, to put I don't think the story is told on a daily chart on Apache right now. I think the story is told on a weekly chart on Apache right now. And you're starting to see some pretty important resistance and support levels form. Number one, you do got that reversal pattern with the potential breakout right where Cody is identifying. That's why you're seeing the weakness here today as you're fighting through that major level of resistance. And the reason I say why the story is told, don't get smoked on daily charts on Apache when the real story is weekly charts. And I could certainly see people coming in and saying, okay, let me get some. But the ultimate decision point here on Apache is $20. That is that major historical support level. That's the support level that got violated on the pandemic, March response from last year. Apache's been fighting to achieve that ever since that time frame. The old saying goes, it gaps, it fills, right? But not all gaps fill in certain time frames. They fill over time. And so as you can now see, that gap's getting filled. I think that for me, I certainly understand people taking it in. I don't think you should be swing trading Apache. I don't get me wrong. I do see this analysis. I do see it on the daily chart, and I wouldn't disagree that much. I just think there's some major levels of resistance that are fairly big zones for Apache right now, that it's just going to be tough to get a clean trigger here on Apache. I like this more as a longer term situation, a position type trade, or some type of cash flow instrument. You can write covered calls on a company like Apache. But I just think you got some significant resistance zones between 17.5 and 20 to do any type of swing trade on. I like it more on the longer term style with a little bit of a hint, a little bit of a cash flow type environment with it.
That's fair. While we're on energy, maybe we can compare them to a couple of other guys that I kind of have my eyeballs on as a place to start. What about Holly, HFC, Cody?
Okay.
And again, as a general rule, these energy stocks are going to move together, right? So it seems unlikely that anyone can do anything, right? Bad news and stuff like that. But for the most part, we are going to see that. We kind of had a little bit of a breakout here happen on Holly yesterday, much like our SunPower, just not as volatile of a candle. We didn't get any of that follow through, but that candlestick, that breakout point itself, still becomes a legitimate entry point for at least some traders. So another breakout, a little bit of a different pattern, right, than our friends at Apache. Certainly not as long developing. A little break there for us. You also have SHLX, a little midstream company that recently broke out of not only resistance, but its 200-day moving average, and you're having the 9 EMA kind of creep up slowly but surely, hopefully presenting a little bit of a springboard to kind of push us through for confirmation. So a couple of energy stocks that I'm kind of watching as well going into the upcoming week.
I really like that. What was the first one we looked at? Holly?
Holly was the first one. Yeah, I had a big pop yesterday.
Yeah, HFC is looking pretty healthy. And I think, again, a lot of this energy conversation is going to also be on those weekly chart reversals over time, like Matt was talking about. And we see the pivot analysis. We see the pivot relationships. Holly looking, here at this, is it 30 right there that we got to clear?
Listen,
healthy
Matt,
right now.
Matt's here. We'll say it's 30. So because Matt and I, we know what happens if it breaks 30, right? Or at least we think we do.
We know exactly what happens if it breaks 30.
We know what we think happens if you break 30. We're pretty consistent. Hey, we're pretty consistent. We like breaks of 30, whether
do.
it makes any sense or not. We are consistent in
I'm
it.
sorry. I've seen too much subjective evidence in 30, Frankie.
Yeah,
And I
it's
said that appropriately, Tim.
Yeah.
There you go.
Let that sink in.
Yeah.
Yeah, there you go.
Yeah.
And, today was a really good, subtle reminder that it's earnings season. We've got a lot of reports coming up in the next few weeks. Next week isn't the big one. There's only, there's about 3 dozen S&P companies next week. The week after will be like 150. So we're getting right into it. So just a friendly note to check and double check your earnings on all of your trades that you're prepping. And to wake me up in two and a half weeks when it's over. But there's always something, especially early on. One that that really caught my eye, Maddie,
Frankie,
was
I need, before you get into it real quick.
Yeah.
I need you to cut a PSA on making sure you check your earnings dates, or this might happen to you.
Yeah, listen, I could.
Right.
If I'm around,
you might die a financial death. Like,
listen, anybody who knows me or heard me at all, even once during earnings season, know that one constant in life is Frank complaining about earnings. Right?
Oh, you and me both, bro. You and me both.
So,
Listen,
but it's important to note them, right? I mean, they're going to happen whether I like them or not. So I have to deal with
I
them.
still think the best national movement I can get behind is 2 earnings.
I am 100% behind you.
Year. Every 6 months.
Yeah.
Listen, I will be the first person to sign your petition, my friend.
It would
Less
be
earnings seasons.
wonderful
be
market.
better.
Yes, I think
Like,
it would be
like
better.
they want to cheat earnings more than they already do.
Well, they'll
Let's
still
give
cheat,
more time.
man.
Yeah, more
Come
time
on.
Give
to
them more
kind
time
of
to
cook
cheat.
the books, right?
That's right. That's right.
So
Give Tess a little bit more time to get those books out.
there you
Accurate.
go.
What are you
So,
talking
yeah.
about, cook? Get them accurate.
Yeah, alternative earnings facts. Yep, that's right.
Hey, we'll figure out the next non-GAAP earnings to justify with Tesla. Hold on.
That's right. That's
All
right.
right.
There we go.
Any others,
Continue.
Frank?
Yeah, I'm sorry.
Cody, yeah, let's take a look at DD. Now, these guys, I think they have earnings. I believe it's the 28th. I did my preliminary check this morning. I have to do my 100% double check before it officially moves to my watch list. But I think they're the 28th, which kind of puts me right in that. I have time, but it's running out quickly, right? Phase. We've seen a ton of strength over in the materials and the chemical space. Dow DuPont's certainly been one of the strongest. Well, I guess it's not Dow DuPont anymore. One of the strongest companies within that space. Little pullback, holding that 9, hammering at that 9 as of right now here today. Tim, could I sign you up for a little pullback play on DD if earnings are far enough away for you? Let's assume that they are for the sake of this conversation.
Well, for a report kind of thing, it would be vetoed instantly because
it's going to be
rule.
Yeah,
but,
so it's going to be one of those.
If you feel like you could execute, your swing trade within the time allotted till I think, what did you say that was?
I believe it's the 28th.
So you got until basically a week from yesterday. So you got all of next week. You got the first 3 trading days of the week after. That's 8 trading days. I mean, if I caught a very clean entry on Monday, potentially, but it will just depend on watch list and mechanics on Monday. But it would have to happen like immediately for me, Frank. To do that.
It does have to happen quickly because if it pulls back, say into Wednesday, now you're really running against the clock. Yeah, it won't make the reports for that particular reason. Just depending on an individual, though, I think we do have time to take a swing trade. But I think you nailed it right on the head there, Tim. It's got to happen soon. It doesn't have a lot of time, or we're just gonna have to let it reset post earnings. You have AVTR, another chemical.
Did Tim veto DD?
It's an earnings veto. It's
When's earnings?
It's
28th.
the 28th. So it's listen, if there's one
What's
thing Tim
today?
loves,
It's the 15th. It's 2 weeks from yesterday.
You'd be surprised how often we yell at Tim for vetoing our earnings.
Listen,
we always thank him subtly, but we like to beat him up about it.
This is gray area. Come on.
I said for the reports I would veto. For if you get a trigger,
this is a hammer
Monday,
off the 9 with momentum.
But you better get it on Monday or Tuesday, or else you're pushing. On that window.
That's the trade on Monday or Tuesday because it's a hammer off the 9.
Yep.
This isn't a trade you're looking at like next Thursday. If it doesn't pay out next Monday or Tuesday, you're like done.
That's
you're
exactly
kind of moving
right.
on.
You're confirming
absolutely.
exactly.
I don't know. I do agree with you, Tim. I do agree. Like veto for scatter reports because we don't break rules.
Mm-hmm.
But for like everybody that does break rules, this is a good trade next week. If you're
I gotta-
not
I gotta
everybody's
tell you
rules are
guys-
14 days, right?
Little inside baseball here. My favorite thing in the world is vetoing on earnings. It's my I
He
just
loves
love
it. You can hear the
because
joy in his
nobody
voice.
can
You can't argue.
debate him.
It's a rule.
that's
No,
the
nobody can
only
pick
thing.
on him. Nobody can beat him up.
That's
And
the rule.
and there's always something in there. There's
Yeah.
always something that somebody
Well, and our rule is 10 days before earnings for the report. So for those of you that are like, what are they talking about? For our scouting reports and earnings specifically, we do not put any stock, regardless of the technical setup that we love, on a scouting report unless it has 10 trading days for the trade to work out. And even though there's some like on that trade on DuPont, that's a good trade for next week. And I could certainly see a lot of traders nailing that trade. And I'd have no problem with veterans coming in and being like, yeah, boom. But for the non-veterans out there that don't understand volatility around earnings, especially the last 2 weeks and how that uncertainty plays out, we don't like to put those on the scouting reports. And so 10 days, Tim is technically accurate. His veto holds, but I still like that hammer off the 9, baby. That looks good.
Yeah, I think you guys nail it 100%. Looks pretty. Got to take those ugly earnings. I found another one. I can't remember who it was. It was probably my favorite setup of the week, and I looked, and their earnings were 5 days away. I didn't even write them down out of I don't know, disgust. Yeah. So I don't know. What about a little bit of a breakdown that is retraced into the old support on Congra Brands, CAG?
Conagra.
I guess I said their name wrong.
How do you say? I don't know how to say it.
No, I think you said them right. I think I got them confused with the video game Contra.
Contra is a wonderful game.
So
Yes.
we broke down yesterday or last week, I'm sorry, retraced back into that old support zone, a little reverse hammer candlestick developing here today. It's been a tough market for the bears. I always feel like I have to have a couple bearish candidates on my list because you never know the future. That one kind of stood out from that side of things.
Yes, I love the pattern. I've not been doing a lot of bearish or shorts in this market condition. Obviously, the market's been bullish. You got to trade what it's given you. I did see there were some interesting developing bears on my list of scans. Not a lot of them out there, Frank, but there's a couple. Conagra actually grabbed my attention. Breakdown on their earnings. So earnings is behind us now. So the problem you guys are talking about, earnings in front of us, in front of us, in front of us. We don't have that issue with CAG here. It's behind us. And actually, the price response on that was a negative response in general. Now you've got a little bear retracement developing. I think you could play this 2 ways, quite frankly. This little flag, you could have like a partial entry if you get confirmation, maybe on Monday, or you could wait for the ultimate breakdown again. I would have no problem if somebody conservatively said, hey, listen, I'm going to give up this buck in between here and the pivot and wait for the pivot breakdown. But I think if I was going to build something, it would be around scaling in a little bit on the first candle, then more on the breakdown, something around that. But Frank, I think it's a tradable pattern. Yeah.
Y'all want to short Conagra Foods, huh?
I don't want to short anything.
You want to short Tackle 25?
I don't want to short anything at all.
That's what y'all want to do?
But I have to have something in my watch list. It's not my fault. It looks like what it looks like.
If you're swing trading.
Watch Tim walk this one back.
Yeah.
Swing trade can be anything.
So all right, let's look a couple more, Tim. Constellation Brands, STZ. So another one with their earnings behind him had a big earnings pop and have basically been dripping down ever since, have now worked back into their 20 period SMA. Could I talk you, Matt, into being open to the idea of a pullback on Constellation Brands?
Pretty special right there. Take it.
That's not a Cody special.
Yeah, that's a breakout pullback. Come on.
No, that is a breakout retracement.
I mean, yeah, it could be both. It could be both, depending on your point of view.
We're not giving every single categorization of a pullback.
But he gets them all.
Cody special.
No, it's
not
a breakout pullback. This is a breakout pullback.
You are describing every pullback in the history of mankind. So
no, I'm not.
We're not going to continue the argument. So on Constellations here, you got to love the support level. Let's start with that support level at 220. You got a horizontal support level, double top there at 220. You had an ascending triangle coming into it. You broke out of that on a positive earnings response, and now you're doing a bullish retracement coming back into the breakout channel. You got to like the technical setup here. Now, like we talk about a lot in the beginnings of technical patterns, it always starts with, you got to like what you're seeing here. When you hear that type of language from a trader, that doesn't mean let's go buy out of the money call options in YOLO. That's not what that means. It means you got to like the bullish uptrend, you got to like the bullish retracement, and you got to like that it's hitting support at 220. You like the analysis leading into the trade. Now you got to see now you got to see a couple things. You got to see 220 hold. A little intraday bounce is not holding. We got to see some degree of confirmation here. When it comes to standard bullish retracements, and why what I said about Cody is very important, confirmation is very, very key right now. Because when you're talking about the Cody special, that is a breakout followed by snapback, pullback into the breakout channel. That you're looking at an intraday confirmation at that point. When you're talking about standard bullish retracements, step system, standard bullish retracements with multiple categories of what is happening, you want to see confirmation here. You don't just want to see the slowing momentum. You don't just want to see the support bounce. You want to see 220 hold, and then you want to see that confirmation after that support level at 220 holding. And that's going to be some subjective, because you got to break that down on the intraday chart to kind of figure out where you're comfortable with that. I got a couple different levels on Constellation I'm personally looking at. I like it, and I'm going to talk about one from an aggressive perspective, one from a little bit more of a conservative confirmation perspective. Frankie, I do think if you clear today's high, you're go time here from an aggressive perspective.
I think that's fair.
And I do like that. That's pretty standard bullish retracements, confirmation, 10% of the ATR above the high of the day. Just make sure those day traders aren't hitting the high, and make sure those day traders now starting to buy. So I certainly see that, but I'm looking at a little bit of a higher level, a little bit of a zone in that 226-ish level. So you got that 226 right there, more for where the old support is, Frank or Cody, not the old resistance. So your support level come down, right into that range there. And so you got that old support, and it's really right there at about 225.70. So 225.70, I like that as a confirmation above. So yeah, I like the analysis coming into Constellations. It's a company I do like. You got to like the support bounce here. But I do think if you get a doji and then you get that upward movement in price, and those numbers could change dramatically based on that, right?
Sure.
These are based on the analysis today. Intraday analysis changes because it's called intraday.
Yep.
So I just think we need some double bottom here, upward movement in price, but Constellation should be on people's watch list. Mm-hmm. And it will most likely be on the scouting report, and the coach will detail that confirmation. Remember, simply because we put a stock on a watch list doesn't mean it's ready to rock and roll. It's got to confirm. And so definitely check it out. But no, Frank, I would not veto Constellation. I like the analysis coming into it. And quite frankly, I like their earnings report. I thought it was a legitimate earnings report coming out of Constellation last quarter as
Always
well.
nice. Always nice to hear. I didn't really, you know me, I don't dig too deep into the earnings reports. I let you do that for me, and you do a great job. Thank you for saving me there. Still looking at a breakout on Berkshire, BRK.B. Knocking on the door last week. No one let him in, but we're still knocking on that door. I don't think this chart is done.
It's a /B there, Cody. It's I think in like TradingView it's a
yeah,
dot
TradingView
B.
it's a dot.
Depending
yeah,
on the platform,
depending where you're at. Yeah,
that's
it
right,
confuses everybody all the time. Everyone always puts it in wrong. So, but they ran right into that resistance yesterday, pushed down with the market, but much like finance in general, and really the market in general, coming back fairly strong off of those lows here today. I don't think anything has changed technically to take this off of a breakout list. Can anybody give me a reason why I should take them off of my breakout list?
Nope.
I have one.
Nope. It is stronger this week than it was last week. So
it's pretty right. It's looking pretty. It's looking pretty
okay.
all right.
The longer it consolidates without violating a support level, how do you not get more excited about that.
Well, I do. So you know me.
I'm sorry if it doesn't break and run on Berkshire, but it's Berkshire. So
it is Berkshire.
I like it. I do like it a little bit more this week. Give me a close about 235, and I think it's go time.
And I love
So-
the weekly chart.
A couple weeks ago on Trade Masters, 3 weeks ago, Coach Greg nailed this one on Trade Masters on that pullback. The
Nice.
slowing momentum at the bottom, the little breakout of, he
A little
nailed
rounding U-shaped bottom at 220.
He nailed it.
Well
He
done,
nailed
Greg.
that one on Trade Masters.
Well, there's a
Awesome
reason
work.
he took the belt from Tyler.
There's a reason he's called old money.
And there's a
he knows
reason-
a thing or two about a thing or two.
He knows a thing or two about old money.
Yeah,
Burke,
he does.
and
yeah.
Who has more old money than Burke?
Yeah, listen, if there's one, that's a new rule. I listen to Greg always on Berkshire. That is a new
100%.
trading rule I am putting into play. Nice job and giving us a breakout opportunity. Pretty clean entry. There's a couple others in finance that are kind of knocking on that same line.
Very quickly on Burke though.
Sure.
Do you need to close about 235?
Yes, I need to see it close yesterday's high.
Okay, can I get a weekly chart on this, Cody, please?
Nope. So it doesn't look like it.
Yeah.
Cody might have had to.
Give me a little bit more time from here. Yeah, thank you, Cody. I think we should all be very excited for a breakout on Berkshire.
Mm-hmm.
And you know what? Berkshire is one of those companies that gives you a lot of space in what is happening in like in the themes that are really kind of moving the market. Because Buffett's really into cyclical plays. He's really into energy and banks and whatnot. Industrial plays. Obviously, Apple is dominant in his portfolio, like Apple's dominant everywhere. But don't you gotta like that long-term breakout on Berkshire here?
Yeah.
I mean, we're talking 3 years of neutrality and stagnation, guys. And we're now just recently breaking out of that 230 level. I think you got to be looking at it.
Mm-hmm. Mm-hmm. Yeah, I think the long-term
Mark, you're the
chart gets you more
value,
excited.
boring Buffett type, old money homes type. Can I get you excited for a breakout in Berkshire?
Dude, listen, I love long-term breakouts, like J&J, which young Cody had on Trade Masters 2 weeks ago, as it was breaking out. I like these type of consolidation, longer-term breakouts. Always have, always will. I mean, there's the psychology behind them is great, right? Established company, long-term consolidation, finally get a little ump to go up. I like him a lot. So
Mm-hmm. Awesome. Frank, was Burke your last one?
Well, you have just one other one in finance, and then we'll wrap up. I just looked at the clock. I know we're against the wall now, but another one that's kind of lining up very, very similar to that. Different placement on the chart, but a breakout on AIG. One of Matt's personal favorites.
Oh yeah,
So
I've touched AIG about as much as I've touched a hot stove in the last 12 years.
Yeah, not a huge fan. Unlike Berkshire, who's breaking out at the top of the chart, right? We have AIG, kind of like our energy plays, right? Kind of like Apache in some ways, where really we're just starting to get up and running. The thing I really like about a potential AIG breakout is it feels like there's a pretty open room for us until we get into the 49 50 range, which is where you're going to run into the 200 weekly, and of course $50 an old support zone, big round number. So one thing I personally like about the way that this is developed, I mean, obviously anybody knows me, anything that's consolidating resistance is always something I'm interested in, right? But we have room to run. I'm not saying it's going to 49 or 50. If I knew for sure, I would tell everybody, but we don't really have any technical catalysts in our way, in my opinion, at least, until we get into that range, which kind of opens up a pretty nice window that we can work with, that we can work into.
No, I just have a bias and emotion around this company since I don't care how clean this.
It just
for me personally, it's just
You remember that movie scene from Jerry Maguire? You had me at hello.
Uh-huh.
What's the opposite of that?
You had me at AI. You had me at AIG.
You lost me at AIG,
You
bro.
lost me at AIG.
Oh, you guys are no fun. You're no fun. Mark, you and I and Cody can hang out on that island together. And then one more pullback, and then I'll let us. No, okay, give me two more. We'll do these ones fast.
Okay.
One pullback, one potential break. Pullback on ACM. AOCOM, another one that's kind of flagged back towards the 9, old breakout or old resistance level. Gotta like the price action, I believe.
Can I see a weekly on this? I just want to see the strength of the support level.
Oh wow!
Like, are we just talking about one top there? Do we have anything else?
It was a big cup and handle, Maddie, on the weekly. It was that was a pretty major breakout last week.
It looks like the support is trying to hold is that double top, Matt, the one from
it's
March.
It's the double. I just wanted to verify there wasn't anything in the to the left of the chart that we had to be concerned about. Let's go back to the daily. Yeah, you got to love that support. You bet on that support level of 52.5.
It's a pretty classic trade setup, right?
If it breaks 52.5, you take the loss. I mean, you just do.
Well, that's what you love about
pretty
it.
Clean,
cheap risk. Right? You know where to put your stop loss. I mean, it's like, yeah, I like it a lot.
And then one other breakout, and that's apps, APPS. Ran up to 60, much like Bitcoin. It had a huge run into a resistance level, pulled back. Buyers came right in on that pullback. We got to that resistance, and we, didn't just carve right through it like it wasn't there. But I like that, right? Especially if I'm not in it already, that I really like it. We'll see how it holds up, right? And this is could be one of those, Matt, that we would like to see. We would like to be having this conversation next week, right? Where we're still knocking on the door of 60, and then we break. Is that fair to say?
Yeah, I would. This. You know me very well, Frankie, on this one. I mean, you take the words right out of my mouth. I do not like overextended runs into breakout channels because they have to go parabolic for them to really, really work out. I love them to take a little bit of a nap, cook a little bit in that cooker, and then break out.
I'm with you. It doesn't have to be a long nap, right? We would, no. And it doesn't mean if it breaks out on Monday, it's not a breakout. It just means that you like what you like and you trade what you trade. But I think this is worth, watching from a developmental perspective.
Okay. How long does it take to cook a pig in a Hawaiian luau? I mean, are we talking hours or days? I've never done that.
Hours.
Okay, so my analogy wouldn't work. Never mind.
No, what are you talking? Cody, you live in Hawaii. They don't cook a whole pig in 2 hours.
It's not.
I'm sorry. I'm not an expert at this.
I didn't say 2 hours. He said, is it hours or days? It's
hours. There are hours in days. There are also minutes in days, Cody. We wouldn't say it takes minutes to cook the pig, would we?
No. Okay. But so they'll put the pig on. So they'll cut it at the chest
real fast.
And they'll put it. They'll put it in the ground and they'll cook it from the morning when they prep the pig and they'll pull it off for dinner.
When
so
you
it's still like a long
Cody's
smoke.
statements, it gets into an argument. So
according to my calculations.
Yeah, Cody, I want you to know that we do call you Millhouse behind your back.
I love Cody.
I love you, brother.
I'm with Cody though. Hey, once you get it going, it's a few hours. You're good. Let's go. No, I forgot what I was actually going to say now on the discussion on the luau. I would like 3 days consolidation.
3 days. Hey, listen, it doesn't hurt to ask, right? It never
Mark,
hurts to ask.
I do got a question for you here. I do believe we're looking at a SPAC, but GHIV. I believe this is a SPAC.
This is Gore's Holdings. I actually have a naked put on this.
I figured Mark had a naked put on it since Mark has
Mark was the one to ask for that.
And so, Mark, question from the chat. What do you think of GHIV?
I have a naked put. I'm playing the $10 level. It's a pretty common strategy I've been doing with companies. And I do my research. I don't do them blind. And I don't do too many SPACs. I was talking to my brother Tim behind the scenes about this yesterday, is that SPACs represent about 15% of my portfolio right now. So, a larger percentage than historically I would allocate to what I consider, spec plays, but what's working is working, right? And what I've been doing on companies like this, and you see it's coming down to the 20-day, right, is I've been targeting either the 1250 or the $10 level. On SPACs for next.
I'm assuming you're 35 days out right now.
Yeah, and I sold this one for like 85 or so, a week and a half ago or so.
Yeah.
You can still get 60, or you can go out to March, and you're not getting as big a relative credit But if you go out to the March options, you see you're just not getting as big a relative credit. And so it's actually, for whatever reason, those shorter term months, you're getting bigger ROI. And then what my plan has and what my plan is, which I've been doing, for example, I have a lot of naked puts expiring worthless today, is then reevaluate, see which SPACs I like the best out of any given group. Once again, not to go over my rules of allocation. I'm not going to exceed a certain percentage, because if the whole SPAC market turns, hey, I don't want to have it disrepresented. So I do have a February on Gores at $10 for February. So,
Mark, you're kind of the SPAC guy at Tap and Train, correct? That's kind of
I
your
have
thing.
become that. Yes.
It's yeah. Well, yes, you have. You tried to become. Okay, that's a different discussion. How do you go about analyzing which SPACs you like selling naked puts on? Because I mean, this is a new analysis for a lot of people that, quite frankly, I mean, the SPAC stuff, I understand it, Chucky, but it's certainly not an area of the
All right.
market I focus on.
There's two things I do. One, I look at management, and two, I look at theme.
Yeah.
All right. Because you're dealing with a lot, in most cases, relatively new concepts. So I need to have a theme I can bet on. Like, go to SRAC. I brought this up on a Sunday night prep class about a month ago. SRAC, whoever has the chart.
Cody does. He's bringing it.
And so what you want to do on SPACs is be patient. And so when I brought this up about a month ago, and this was, at the start of November, we were getting $210 for the 1250s that expired in February. And this is a space company. They have lots of good deals in place. Think of them as the space movers, right? So it's a space play. But not just like Virgin Galactic or something else. But anyways, it's a good theme, right? It's a good theme. It's a new company. Now, I don't know if they're
So they're acquiring companies similar to that, though.
So I don't know if they're going to go to $2 or $25 or $200, right? I mean that's what you're dealing with
it's
very new concepts. Yeah. But I liked the theme, and I was getting a huge credit at $12.50 that gives me a cost basis near $10 at the end, and so I was patient and I took advantage of that. Now, would I chase it now at this price? No. But if it came back down, let's say we have a sell-off and it comes back down, and I can get those big credits near that 1250 or 10 strike, that's when I've been trying to jump on these. Good theme, something that I can get a big credit for. I don't chase. I don't, and when it goes up like this, I'm like, hey, I made my $200, right? I'm happy. And if it comes back down and there's another opportunity in the future, I'll do it again. The other way I've been playing SPACs is looking at the management. Looking at companies with reputable management that have been successful in bringing out SPACs in the past, or are really big names. I mean, the most common of these, even though, is Bill Ackman with his SPAC PSTH.
Does he even have anything under that yet?
No. And so these I certainly do not chase at higher prices, but once again, there are opportunities when they come down to sell those naked puts at near the starting price. And so, I sold one on PSTH about a month ago near the 22.50 strike price. And then once again, when it goes up, hey, I should have, right? Had I had perfect knowledge, I should have just bought the shares, right? But that's not the game I play, and it's been very successful. Being patient, waiting for good opportunities, getting those big fat credits near the entry price. And if you're patient, eventually the market's going to have a sell-off, and eventually SPACs are going to have a sell-off, and you can rinse and repeat it again. So that's a very conservative way I've been playing SPACs. It's worked out so far.
Basically what I'm hearing, Mark, is this is an area that you're interested in. It piques your interest just from this is something new that could be something big down the road, right? I mean, this could be this could change the way we look at traditional IPOs to a certain extent.
Yeah, right? And there's the battle. Like, I just was reading on a dating app like Bumble, the dating app Bumble. I'm sure you guys don't know. They're filing a traditional IPO in the coming weeks.
Full transparency, I didn't know Bumble existed. I'm there.
Bumble is a dating app. They are going to be, I think, BMBL.
Mhm.
So they're going to be a new IPO that's going to be, and there was like a lot of the chatter behind it wasn't them going public or their valuation, which is of course insane, but that they didn't go public via a SPAC. I mean, that
Yeah.
was why didn't they do that, right? And so it's going to be interesting in the coming years.
Well, you saw
Um,
some big names last year go SPAC instead of the traditional bank IPO route.
Yep.
Well, yeah, I mean, you saw SoFi just I forget, was it earlier this week or late last week? Ticker symbol IPOE, I believe. Um, when it, yeah, so yeah, late last week. So you're seeing some names, some brand names, some things you recognize. Instead of going the traditional IPO route, go at the SPAC route. And it's really interesting to see if this is a trend that will continue throughout the years. If this is
Well,
new,
let
if
me
this
ask
is
you a
a
very
flash in the
pointed
pan.
question then, because you've been very interested in SPACs for months and months and months now, right?
Yes.
Even when we, like, in our internal personal conversations where we're very direct with one another, like, you have been arguing for SPACs, and your belief in there, like you said, I don't know if they're going to go here or go there, but I'm very interested in that movement. How much do you feel that the SPACs need to have some representation in portfolios, or is this just something of a fad that may turn into
Well,
something bigger? It's
I mean,
got some pretty big walls backing SPACs, Mark.
no, I mean, and it's definitely like the euphoria. I think they represent the euphoria and greed of the market. Now, I mean, the quick money to the upside. I mean, there's ways to play that. And once again, like even in a millennial mark type instrument, I'm still going to try to find the conservative way to play it,
Oh, of
right?
course.
And cash
Well,
flow.
that's
So
why you
even though
saw
it's,
naked puts instead of taking directional action.
and finding those and being willing to take ownership if I get it at a lower price. Um, they're a fast market. Like everything's fast these days, right? Metals are fast. Everything, it seems like everything's fast. So I don't, but the swings in SPACs can be very, very violent for swing traders. But I mean, there is opportunity, and finding a SPAC with a good theme. Like for example, there's been a lot of rumors. RBAC.
How's the volume and liquidity on them selling your deep
Oh my
puts?
gosh, it might as well
Like
be
massive
Apple or Facebook.
volatility, right? Yeah.
Yeah, I mean the
Not volatility, liquidity.
the
Yeah.
liquidity. No, the liquidity on SPACs is like near
It's
perfect.
insane. Yeah, it's insane. Yeah.
Like for example, RBAC. I mean, there's rumors of RBAC acquiring the Boston Red Sox and taking the Boston Red Sox public.
Whatever.
Listen,
See, now I'm out. I was interested. You had me hooked. I was legitimately hooked, and then you went to the Boston Red Sox going into a SPAC IPO, and now I'm just like,
listen, and
now
when it
you're
happens,
drinking
you're gonna be like, oh
Kool-Aid.
crap.
All right,
Why not the
Kool-Aid.
Yankees? I
What
mean, if
color
you
of
got
Kool-Aid
rumors.
do you want me to make today, buddy?
Boston Red
Goodness
Sox.
gracious. I want to analyze Apple right now so I can feel better about the environment.
I'm just saying, it's a crazy world. It's a fun world. I play around with it a little bit in conservative ways where I can get in cheap, and eventually I'm going to be put one of these. They all expire worthless because I'm really patient on my timing, and then of course everything's just euphoric right now. So eventually I'm going to be put one of these, and I want to make sure it's something I like. But so getting back to your original question on Gore's Holdings GHIV, I do have a naked put at $10 on that for February.
There's still just so many unanswered questions around this whole industry and space. We talked a little bit about this, Mark and I, the other day on the phone. And, I get it. I mean, the action, the interest is there by veterans, and the eyes of the market are there. The liquidities in the options market's there. And there's obviously, money to be traded here. But in terms of answering whether it should be in a portfolio long term, I think that's an impossible question for me to personally to answer. For everybody out there, I know for me, I'm not seeing them as long term investments. No, I think it's a movement that could turn into something more and bigger, and might
if
cement
you treat
itself.
it as a long term investment, you have to evaluate it the same way you do an IPO. How would you evaluate a new IPO coming out? Realizing that you're probably paying not even realizing, you are paying in this market a premium.
Sure.
Whether it is Airbnb or motorsports games that came out. I mean, everything just gets jacked up immediately, right? So that's tough. You don't have any technicals. You don't have a series of earnings reports. So, I mean, a lot of people, I mean, Matt, you and Tim have stayed away from IPOs for years and years for those reasons. The same logic applies to SPACs.
It's the exact same logic, Mark. And,
Well,
and it's, honestly, it's the exact same thing why Tim and I are laid onto this SPAC party. Because we are historically anti-IPO, and this is a new IPO movement, basically. I am interested in the movement. I am interested in this because I don't like IPOs, and I don't like how the banks have handled IPOs in the last 10 years. So I'm fascinated by the movement. Am I there yet where you're at? No. Like when I hear Boston Red Sox, I just kind of
that was the end, right?
Maybe they had a good.
Okay.
Maybe, listen, it's an established company, the Boston
I
Red
get
Sox.
it, but Bill Ackman doesn't even have any assets in his SPAC, and it's up 30%. Like,
no, there is no, but it's the same thing with IPOs. I mean, this is one of the reasons that you worry about a bubble, right? IPOs get jacked up 100% before they get issued. The second a SPAC merges with anybody, it goes up 60%. I mean, that is going to end at some point, right? You just don't know when.
And last thought from me on this, and then we're going to wrap up the show. To James's point about how they've been around for a long time, that's not the point. There were more SPACs in 2020 than there were the 10 years before that. So can they become this presence? The popularity right now is way different than they've ever been.
It's not that. It's not even just the popularity. It's the price appreciation. We haven't seen this.
No, and this is why doing your research on the company, on the ownership. Listen, when we look back 5 years from now, some of these SPAC darlings are going to be at $1, $2. Some of them, they'll be winners. They'll be much higher, just like any normal market.
Honestly, I think it's the tech bubble. You have a lot out there at the time. You'll have a few survivors, but those survivors dominate.
I mean, and so it is researching. If you are, you trade anything, right? But if you are investing,
not AIG.
Yeah, apparently Tim doesn't like clean AIG breakouts. Can't trade that. Everything else is good.
No, not AIG.
But realize that one day some of these SPACs, I mean, go back and look at a lot of charts, IPOs that end up being $1, $2, $3, right? So realize that there's some real dogs in there, and do your due diligence. It's not always going to be free, easy money.
No, of course not. All right, guys, let's wrap up the show. Obviously, a busy week we've had in the markets here, and a lot that we've kind of broke down, taking it down one step at a time. Appreciate everybody out there in Team Tackle for joining us on a daily basis. Let's get, just a couple final thoughts from everybody. Mark, you've got a show here, I believe, in 45 minutes for pro members. Your weekly wrapping it up, Mind of a Trader at the closing bell. That's at 3 p.m. Eastern, correct?
Yeah, I mean, we start off talking commodities, and of course, silver, gold, a lot of the metals having a rough time today, a lot of the individual stocks. Now we're going to talk about the technicals, the patterns, what to make of it. And then, of course, answer any questions we have before the market bell.
What I think Mark said is we start off talking about commodities, but we finish talking about SPACs.
Because I know, because I answer questions, and very people
I know
questions about SPACs.
Matt, any final thoughts for the team out there?
Martin Luther King Jr. on Monday, correct?
Yep.
Holiday. We got market hours are closed on Monday, so we will not be having a show on Monday, but we will be having a podcast. And I do really appreciate Martin Luther King Jr. Day. That's kind of my thing. I like it. And every year I'll watch his great speech from was it 1962? I think it was 1962. Maybe it was before 62. Maybe it was 60 or 61. Anyways, James, I'll have to look back in my calendar to see when I attended that. But in terms of, James will like that one. But every year I'll watch that amazing speech with one of my kids, typically, and we'll just have a conversation around the historical importance of that. And I love that day. It's one of those moments I love. Cool. So enjoy the day. Right? Enjoy the day, but market's closed. So have a good extended weekend, Tackle.
Yeah. Have a safe, fun, enjoyable weekend. Enjoy Monday. We'll be off on Monday. We'll back on Tuesday, obviously with our halftime show right here on the YouTube channel. If you've not done it yet, subscribe, click the bell.
63. Thank you, Cody, for that.
It was
63.
1963.
For some reason, I had March of 62 in my head for some reason.
You're
Did
close.
something
bro.
happen in March of 62?
I'm gonna
You
have to
tell
look
us,
it up.
old man.
I know. I gotta check my Rolodex. I gotta get.
Frankie, always great to
Uh,
have you, sir.
It's always a
Appreciate it.
pleasure. Thanks for having me as always. Stay on top of your earnings. You know the drill, Team Tackle. I trust you to conduct your business the right way. So have a great weekend, and I'll see you next week.
Love you guys. All right, we're out.